All right, cool. We're good. Let's see. So, as you can see, right, just follow up from last week. Let's see, we closed out around here, right, for new week open. So, I'm kind of, I'm pretty much convinced now that we'll probably see a decent little pullback, just in terms of overall. Just I consider that a structure break to the upside. So, more so, well, I don't even know if I want to try to look for anything here. Honestly, I see this just being a pretty quick rally. Um, but we can finally, start looking for longer term opportunities. That doesn't mean that it's not okay to buy, because obviously, trying to get this opportunity, we don't know how far to pull back. So you can essentially try to buy your way up here to then look for hedges, and then those hedges would potentially become more longer term positions. But we'll see with due time. Um, in actual specifics, I was more so looking for, what is this doing? Hold on. What is wrong with my mouse? Sorry, guys. I don't know why this is messing up. Okay, that's fine. My bad. So pretty much, I was awaiting a reaction, somewhere inside this wick here, just as an overall range. But as you can see, we never reached it, right? Even during overlap, right? We didn't reach it. So since I saw this occur here, and then on EU, right, I was already seeing a structure break to the upside and a potential reversal occur right before overlap, and DXY hadn't reached, the potential point of reference. Why is this taking so long? Right here. So this is New York Open. So when I'm looking at price action here, right, intraday high hasn't broken yet. Obviously, this is now the range that we're in, and we're not essentially in a bullish market until that high breaks. So I'm looking at, the fact that this is becoming very corrective, right? Lower low, higher low, lower low, higher low, lower low, and this is where we're stalling, right? Price stalls, right? Takes liquidity up here, then takes liquidity down here, and then leads to the structure break. So that reaction is essentially will break scalping structure. But keep in mind, we're still in in bearish structure until that high breaks. But obviously we want to be in down here to secure partials here, right? In terms of RR, that's the best way to go. Which is why these scalping structure breaks are pretty much significant to us, right? As they're starting to give us signs. So we have a structure break, right? Leave a point of liquidity here, right? So there's two possibilities there. Right? That could be a possibility, right? Maybe seconds time frame SC, but my only issue with that would be that if we reject from here, right, that's like a 90% retracement. This could just come back up here and then take out, bullish structure and then continue bearish structure, which is initially what was happening here. So this is not, favorable towards my end, because I thought that whole process through. So what happened was that liquidity was taken, and this is what played here, right? We didn't break structure there, but we maintained this low. So that led to the eventual structure breaks that occurred soon afterwards, right? So this had already happened, prior to New York Open, right? Because this is still 6 a.m., 6 a.m., 6 a.m. So this happened, as I was literally opening up my charts. So now this is pretty much not making sense to me, right? DXY isn't at a point of reference. Ooh, what did I do? Right, DXY isn't at a point of reference, and we're already seeing EU, shoot up to the, or give us, signs of bullishness. So it doesn't make sense to me, so I just avoided it for the day. And yes, there were pretty good opportunities there, but right, that doesn't mean there's not any more opportunities you can get into. So looking at GU now. Oops. All right, so let's see. So, right, looking at the daily. So this was the final low that created that final high. So we're now pretty much approaching, or we're inside of, discounted pricing, from a daily time frame, right? But how do you find potential POIs there? So there's obviously one big region there. Let me just take everything off and I'll show you. So there's pretty much 3 possibilities here that, I can see potentially there being something. So there's potentially inefficient pricing there, inefficient pricing here, and a long wick, meaning there could be liquidity there, right? So how do you know which one to choose? Well, you zoom in, right? And then you go and check which one makes more sense. So just go ahead and skip to H4. Right, so inside here, right, there's inefficient pricing. There's a push down here, right, and everything else seems like it's been mitigated, because, and I say that because there's inefficient pricing here that was met there. This candle is now potential SC inside of here that was mitigated by here. And now this last wick reached into this wick and has not come back there. So automatically I'm appealed here, and I'm also appealed here, because there's potentially an SC in this wick, and maybe this mitigated that previous, and then this is not mitigating this. So what I'm going to do is I'm going to zoom in. What is wrong with this? Okay, I don't know what's going on here. But yeah, so anyways, let's see, I'm gonna take this off. So as I'm looking at price here, right, this was that relative area that we were talking about. So I'm pretty much paying attention to this candle here, right, potentially shot down, right, which is then mitigated by this move here, and then there is a wick here, right? So what I'm going to do in this scenario, I don't want to complicate it for myself, so I'm just going to go ahead and go on from there. Let's see, right, so I'm going to mark out both of my potential POIs. And do them in different colors. All right, so now I have potential areas of interest, so I'm gonna wait and see what happens during session to then go for a trade. All right, so let's see, take this off. So as we were in session, or coming into session, right, this was what I was seeing. Right, we came back into this, the second area of interest, which is the wick, and that's why I highlighted the wick, because potentially on smaller time frames, that wick could have been a mitigation move for this bigger zone, which is the red one. right? So there's always a possibility it could hit here or it can hit here, but we're always waiting for the reaction, right? So looking at structure here, right, you see bearish volume starting to diminish, but there's no true sign of any bullishness, right? Obviously until we get that push, right? So I'm not looking at this as the last high before we created the final low, creating that range, which this is now the break of structure for. And this to me is also a potentially like an M5, M10 inefficiency fill. So I'm going to try to find a position here to then take to the upside. Right, so essentially this would be a pretty big stop, right? I probably would have done 10 pips there, and that was my trade, right? But unfortunately I had to wait until session due to rules. But even if I took it here, the stop would have been about 12 pips. So you see, it doesn't make much of a difference. But this was my position from GU today, and I took partials. There, right? That was my target. Countertrend in terms of intraday, but pro trend in daily H4, etc. Not H4, but daily, right? Overall direction. And the cool thing about that is, thanks to this daily closure, and we took that liquidity, so money's off the table, right? This now has potential to potentially even start retracing to, I believe, at least this candle. So that's already almost 200 more pips, right? And then now I can start hedging for potential sells while holding the buys. And even if the sells fell in the long term, this can pay out, you know? So I'm pretty much covering myself no matter what scenario occurs. Right, so does that make sense? Am I making sense here? That was pretty much my scenario this morning. And honestly, best case, this rockets and it goes to take out highs, and that's a massive trade because I'm still holding positions from here. There's no way price is going to take these out. Guarantee that. You're confused? How so? I showed you what I did. All right, so pro trend, because let's see. Pro trend because this is our lower low from this high, right? This is position structure. This doesn't break until that breaks, which it already did. But from a swing perspective, right, this was that pullback for this. Unwillingness to go lower, broke higher, potentially starting liquidity here. Solidified low, takes out equal highs. Now meaning that this is bullish structure. We have a pullback from here. We have a pullback from here, achieve premium, right? Create a new higher high, taking out all of this structure here. But from a swing perspective, this was the final low before we created the final high. And that's where I got my range. And that's where the breakdown started. Right? Potential POIs here. Inefficiency, potential long wick, another inefficiency. Right? My POIs were then here, here, and this inefficient pricing. We ended up getting the one that was around here, which was on the 15-minute, I believe. trying to remember where it was. Was it here? I forgot where it was. I forgot what time frame we were looking at that in. Yeah, it was there, somewhere around there. And then price came back, tapped, but I didn't enter until we got the confirmation, which was the confirmation was this was the final high that created this final low. That range was broken, be it break of structure. That's so ugly, right? Came back. This is my reference point because it's a structure point, the final structure point, right before we broke structure. So my position was there and I gave it 10 pips. And I took 2 positions here where I closed one at those highs that I just showed you, which is over here, I believe. No, I'm sorry, right here. But yeah, what are you confused with? Let's see. I forget the little things still. That's why I failed today, but learned. That's the point, bro. That's the goal. But does it make sense though? Like, if it doesn't make sense, then, you know, it's going to be hard to even, you know, try to apply this, you know? Like the point of it is to make sense, right? Is approaching top down, waiting for your rules, waiting for your time of day, right? Long-term buys, I mean, yeah. I mean, it obviously helps me a lot because it's, you know, I'm a swing trader. All right, so John, what are you confused with now, bro? Hedging, that's one of the videos. Where's that in? I forgot what video that was. Yeah, it's in that. So pretty much hedging is just, let's say, let's say I take this position here, right? 1% risk, right? We take out these highs, right? But we're still technically in bearish structure based off of this range. This is the last swing move. So this could be a premium. So let's say I find a trade here, right? 1% risk. This is now hedging in case that structure, maintains itself and creates a lower low. This sell position is covering that buy position, right? And the sooner you're break even here, that's when you're fine. So you're covering yourself both ways. Even if this goes up, right, this will break even, but you still have your original position. Excuse me. I forgot to zoom out them in. I just zoomed in and zoomed in. Yeah, I mean, just zoom out. When in doubt, zoom out. Always. How do you determine lot size, bro? Or percent. All right, exactly. So how do you calculate lot size? Yeah, no, not. Yeah, that's how you get it. But what do you need? What do you need to know? What information do you need? Risk. You need to know account balance, percentage risk, right? Stop loss size, and the pair you're trading. So the same way that you calculate risk here is the same way you're going to calculate risk here. There's no difference. Obviously, the only thing that can change is if you want to be conservative. If you want to be conservative, right, this could obviously be whatever your original risk percent is, which is like 1%, you could do half here, right? Because even if this takes a loss, you only take half of the potential profit of that move. So that's up to you. It doesn't, it's, I mean, me, it's personally, it's the same thing. It doesn't matter to me. It's the same, right? I accept my risk. I acknowledge my risk. I accept my risk. All right, so it could be 1%, 1%, 1%, 1%, 0.5%, 1%, 2%, up to you. Does that make sense? That's what I was asking, because what if you hedge, take 30-second percentage break even? At that point, you make no money unless you took partials. Well, you're ultimately going off of what if, right? You never know which one's going to happen, so why are you not going to take the risk? You're not going to take the risk because you're scared of not making money both ways? That just shows fear and FOMO. Well, not necessarily FOMO, the opposite of FOMO. You can't go based off what if, bro. You got to cover yourself both ways regardless. Because you never know if you're going to get, if you're not going to make any money, if you're going to make any money, if you're going to break even. You never know, so you just got to work with what you got. Yeah, hopefully this doesn't retrace too much. I want this to fly. You've already broken the necessary structure. Want another buying opportunity? You're going to get way more opportunities. The first thing you want is obviously to assure the direction. Then you'll get one final pullback and then we'll fly. Right? But right now, we technically haven't gone into bullish structure until we substantially break that high. 45-minute. What, you mean inefficient pricing? You'll get one. Honestly, I think you might get it London, if anything, unless this just crashes, which would be sad. Because at the end of the day, right, this was the final high that created the final leg down, right? This could even be the premium to continuation. Hopefully that's not the case, right? Obviously the momentum is a good sign, right? Strong volume is a good sign, right? Very weak bearish volume. But this can obviously change overnight. But yeah, do you guys have any questions? How's everything going? I know a lot of people in here have been in for a couple weeks already, at least. I think, for the most part, yeah. Did you ever look for BS on light chart? No. No, I was thinking about that, though. Look, let's look at this. Look at this. That's definitely not the wrong idea. I mean, if it works for you, it works for you. Right? Right, initial structure break here. Let's see. Next level of structure break there. Pull back. Yeah, like I can definitely see that working. Definitely. If it works for you, it works for you. Oh, what the hell? Oh, I don't know what's wrong with my mouse. But yeah, most definitely you can use line chart. Or you could even use pivots. Where are they at? You could even use pivots. Let's see. Where are they at? Right here. Pivot points. Is it these? Nope. These. You could even use these to help you, look at a potential structure points. Yeah, you see, I don't think I would be able to work with these. Because I think it's good to help you understand structure, look at structure points, in an overall scale. See, like this high was created, right? This low was created, break of structure, any pullback, continuation, pullback, continuation, pullback, continuation. So it's good to help, read structure. Not bad. Yep, fractals. I don't like using that word though. Everybody uses that word. Pretty annoying. Oh, fractals? I've never used that. These? Oh, that's what this is called. I see. Do you mess with the settings or what? You have to play with it. Show me yours. Oh, you don't? Do you still use these? Oh, you took them off. Yeah, this would be pretty annoying for me. Yeah, I mean, it's okay to use those to learn structure. But yeah, do you guys have any questions? If not, I can end it off here. I was looking at GM at the accumulation. Yeah, I mean, I've been saying this can be accumulation for a long time. What's your IG again? Mitigate. 50% I see where. What do you mean? I follow you back. Another reference point right there for my buy scenario. What do you mean? Surgers. Yeah, surgers. Yeah, but I mean, I don't know what you mean on here. 50% SC. I don't know. I don't know what you mean. And the cool thing about this, bro, is that this has so much room. Right? If we get this push here and we take out this high, this isn't even the SOS. This is the optimism that's showing itself. And then we can get one last pullback or even head all the way to these highs. Head to these highs, then show signs of SOS, which is just another bull flag, and then skyrocket. Like, the potential here is so cool because it pretty much gives you a bias for the next, honestly, the next 2-3 years, you know? Right, like pre-supply, setting climax, automatic rally, secondary for test phase B, spring, test, potential LPS forming anywhere here. One quick question you mentioned was if to the right has been filled. It doesn't matter what's over here. It just matters what's over here as long as these haven't been tapped. And now this is tapping it. Right, like this inefficiency, wick, inefficient price there, fills it here because there's nothing to the right of it. There's nothing that's already filled it, so it's filling it now. Does that make sense? But yeah, hopefully that answered your question. I'm gonna go ahead and end it off here. Let's see, it's been 30 minutes. Yeah, solid call. I know Sergio's doing his call tomorrow. Hop on those, cause he's a bit insecure about himself and he wants you guys to help him out. I didn't say that. Yeah, he just wants you guys to hop on so you can give him confidence. But no, they're pretty cool. Like the whole concept of them is pretty cool. That's what I thought as well, but the video was explained a bit different. Yeah, I probably reworded it. I mean, I probably worded it wrong, bro. I'm sorry. Once I get this whole situation with the videos sorted, I'm probably gonna redo the course too. It'll take me some time, but I'll get it done. But yeah, just give Sergio some moral support because he needs it. But yeah, other than that, I'll see you guys tomorrow.